The world is on the brink of a financial earthquake, a seismic event that threatens to shake the very foundations of our global economy. This isn't just a minor tremor. It's a looming catastrophe that could dwarf the financial crises we've seen in the past. One far more devastating than the tremors of 2008. The signs are all around us, yet many remain oblivious to the impending disaster. The frantic activity on the trading floors, the plummeting graphs, and the echoes of past crises are all harbingers of what's to come. Governments worldwide have engaged in reckless money printing, a practice that has spiraled out of control. This isn't just a temporary measure, it's a systemic issue that has been building up over years, if not decades, creating a debt bubble of unprecedented proportions. This bubble is growing larger by the day, threatening to burst at any moment. Financial analysts have been sounding the alarm, but their warnings often fall on deaf ears. This unsustainable path leads to one inevitable outcome: a collapse that will reshape the financial landscape as we know it. The foundations of our economic systems are crumbling, and the clock is ticking. A collapse that will reshape the financial landscape as we know it. The foundations of our economic systems are crumbling. The once sturdy pillars of our financial institutions are now showing cracks, and these cracks are widening with each passing day. Bond markets, the bedrock of the global financial system, are teetering on the edge of implosion. The stability we once took for granted is now in jeopardy. Investors are growing increasingly nervous, and the bond markets are reflecting this anxiety. Are teetering on the edge of implosion. The stability we once took for granted is now in jeopardy. The teetering stack of coins symbolizes the fragile state of our financial system, and the worried faces of financial experts tell a story of impending doom. When they fall, a domino effect will ripple through the stock market, sending shockwaves across the globe. No country will be spared from the fallout. The interconnectedness of our global economy means that a crisis in one region will have far-reaching consequences, sending shockwaves across the globe. No country will be spared from the fallout. The financial news being watched in different countries highlights the global nature of this impending crisis. Everyone, everywhere, will feel its impact. This impending crisis isn't a random act of fate. It's the direct result of flawed policies and a dangerous addiction to fiat currency. The consequences of these actions are now unavoidable. Policymakers have been discussing these issues, but solutions seem elusive. It's the direct result of flawed policies and a dangerous addiction to fiat currency. The consequences of these actions are now unavoidable. The relentless printing of money has led to currency devaluation, eroding the value of our savings. Governments, drunk on the power of the printing press, have flooded the world with paper money. This flood of currency has created an illusion of prosperity, but it's a house of cards waiting to collapse. Have flooded the world with paper money, devaluing our savings and eroding our purchasing power. The value of hard-earned money is diminishing rapidly. People are spending hastily, trying to get ahead of the inevitable devaluation. Devaluing our savings and eroding our purchasing power. The value of hard-earned money is diminishing rapidly. Inflation graphs show a steep upward trend, and people are growing increasingly concerned about their financial future. The time to panic is not when the crisis hits, but to prepare before the storm arrives. Preparation is key to weathering the financial tempest. Just as people prepare for a physical storm, we must prepare for this financial one. But to prepare before the storm arrives. Preparation is key to weathering the financial tempest. This means taking proactive steps now, rather than waiting for the crisis to unfold. Financial planning activities are more crucial than ever. This means understanding the root causes of the problem, challenging conventional financial wisdom, and taking proactive steps to safeguard your wealth. Financial seminars and expert discussions are invaluable resources in this regard. And taking proactive steps to safeguard your wealth. The future belongs to those who are prepared. Investing in tangible assets like gold can provide a hedge against the coming storm. The time to act is now, before it's too late. We have been sold a lie, a dangerous illusion that paper money equals real wealth. This misconception has been perpetuated for generations. We have been led to believe that the more paper money we have, the wealthier we are. But this is far from the truth. Fiat currencies, with no intrinsic value, are nothing more than IOUs from governments drowning in debt. These pieces of paper are backed by nothing but promises. Promises that can be broken, leaving the holders of these currencies with nothing but worthless paper. Their value is based solely on trust, a fragile trust that can be shattered in an instant. This trust is the only thing standing between a functioning economy and complete financial chaos. A trust that is rapidly eroding as central banks continue their reckless money printing spree. This endless printing dilutes the value of money. The more they print, the less each unit is worth, creating a vicious cycle of devaluation. Every dollar, euro, or yen printed devalues the existing currency in circulation, reducing its purchasing power. This means that the money you have today will buy you less tomorrow, chipping away at your hard-earned savings. The more money that is printed, the less each unit is worth. This is a hidden tax on your wealth, eroding your savings without you even realizing it. Inflation, that insidious beast, rears its ugly head, eroding the value of your money over time. It creeps up slowly, often unnoticed, until one day you realize that your money doesn't go as far as it used to, making it harder to afford basic necessities. Everyday items become more expensive, squeezing household budgets. Families struggle to make ends meet as the cost of living continues to rise. Central banks, with their endless rounds of quantitative easing, have created a system addicted to cheap money. This addiction is unsustainable. It creates bubbles in the economy that are bound to burst, leading to financial crises. It's time to wake up from this collective delusion and recognize the inherent flaws of fiat currencies. We must seek alternatives. Alternatives that are not subject to the whims of central banks and governments. Real wealth is not measured in pieces of paper, but in tangible assets that hold intrinsic value. Gold, real estate, and other tangible assets are the true measures of wealth. These assets have stood the test of time, maintaining their value through economic turmoil and financial crises. Investing in tangible assets provides a hedge against inflation and currency devaluation. It offers a sense of security, knowing that your wealth is preserved in something real and valuable. Throughout history, tangible assets like gold have been used as a reliable store of value. They have been trusted by civilizations for thousands of years, long before the advent of paper money. In today's uncertain economic climate, diversifying your investments into tangible assets is more important than ever. It is a strategy that can protect your wealth and provide peace of mind. By understanding the illusion of paper wealth and taking steps to invest in real, tangible assets, you can secure a more stable and prosperous future for yourself and your family. As the storm clouds gather, it's essential to seek shelter in assets that can withstand the coming economic hurricane. Tangible assets, with their intrinsic value, offer a safe haven from the turbulent seas of fiat currencies. Gold, the ultimate safe haven asset, has stood the test of time, preserving wealth for millennia. Silver, gold's less glamorous cousin, also provides a hedge against inflation and economic turmoil. Bitcoin, the digital gold, has emerged as a decentralized alternative to traditional currencies. Real estate, with its tangible nature and income-generating potential, provides another avenue for wealth preservation. Owning physical assets, whether it's a rental property or a piece of land, offers a level of control and security that paper assets simply cannot match. Diversifying your portfolio across a range of tangible assets is crucial for weathering the coming storm. Section 4. The power of financial education. The greatest weapon against financial turmoil is not gold or silver, but knowledge. Financial education is the key to unlocking true financial freedom, empowering you to navigate the complexities of the market and make informed decisions about your wealth. Traditional education systems have failed us miserably, leaving us woefully unprepared for the realities of the financial world. We're taught to work for money, but not how to make money work for us. This lack of financial literacy leaves us vulnerable to manipulation by those who control the levers of power. Take control of your financial destiny by becoming a student of the market. The more you learn, the better equipped you'll be to identify opportunities, mitigate risks, and protect your hard-earned wealth. Section 5. Echoes of history's lessons. Those who fail to learn from history are doomed to repeat it. The warning signs of financial collapse are not new. They've been flashing for centuries. By studying past economic crises, we can gain valuable insights into the patterns that lead to collapse and the strategies that can help us weather the storm. The year 2000 marked the beginning of our current predicament. Alan Greenspan, then chairman of the Federal Reserve, responded to the dot-com bubble burst with a flood of easy money. Look back further, to the collapse of the Roman Empire, the Weimar Republic hyperinflation, or the 2008 financial crisis. By studying the past, we can better understand the present and prepare for the future. Section 6. The shifting sands of global power. The tectonic plates of global power are shifting, and a new world order is emerging. This transformation is not just a fleeting moment, but a significant realignment of economic forces. Over the past few decades, we've witnessed a gradual but undeniable shift in the balance of power, driven by economic growth, technological advancements, and strategic geopolitical maneuvers. The traditional powerhouses of the West are now being challenged by emerging economies that are rapidly gaining influence and asserting their presence on the global stage. The BRICS nations, Brazil, Russia, India, China, and South Africa, are challenging the dominance of the US dollar, threatening to upend the existing financial order. Their collective economic power is growing, and they are making strategic moves to reshape global finance. These countries, with their vast resources and burgeoning markets, are no longer content to play second fiddle. They are actively seeking to create a multipolar world where power is more evenly distributed, and their voices are heard on the international stage. These nations understand the inherent flaws of fiat currencies and are actively accumulating gold reserves at an unprecedented rate. This accumulation is a clear signal of their intent to fortify their economies against potential financial crises. By stockpiling gold, they are not only hedging against the volatility of paper currencies, but also positioning themselves to introduce a more stable and reliable monetary system. This strategic move is a testament to their foresight and determination to safeguard their economic future. Their goal is clear: to create a new gold-backed currency, one that could potentially dethrone the US dollar as the world's reserve currency. This move could redefine the global economic landscape, offering a more stable and reliable alternative. A gold-backed currency would not only provide a hedge against inflation, but also instill confidence in the global financial system. It would represent a return to a more tangible and trustworthy form of money, one that is not subject to the whims of central banks and government policies. This seismic shift in global power has profound implications for your wealth. The ripple effects will be felt across all financial markets, influencing investment strategies and economic policies worldwide. Investors will need to reassess their portfolios, considering the potential impact of a new global currency standard. Financial institutions will have to adapt to the changing landscape, and governments will need to navigate the complexities of a multipolar world. The stakes are high, and the outcomes are uncertain. But one thing is clear: the era of US dollar dominance is being challenged like never before. As the US dollar's dominance wanes, its purchasing power will continue to erode, further fueling inflation and economic instability. This decline will impact everyday life, making goods and services more expensive. The cost of living will rise, and people will feel the pinch in their wallets. The erosion of the dollar's value will also have broader implications for international trade, as countries seek more stable and reliable currencies for their transactions. The global economic order is in flux, and the consequences will be far-reaching. Gold, as the ultimate safe haven asset, will play a pivotal role in the New World Order, preserving wealth and providing stability in uncertain times. Investors are increasingly turning to gold to safeguard their assets against the volatility of fiat currencies. The allure of gold lies in its intrinsic value and historical significance as a store of wealth. In times of economic turmoil, gold has always been a reliable refuge, and this time is no different. As the global financial landscape continues to evolve, gold will remain a cornerstone of economic security, offering a beacon of stability in an ever-changing world. Section 7. Charting your course through the storm. The coming financial storm is inevitable, but your fate is not. By taking proactive steps today, you can protect your wealth and navigate the turbulent seas ahead. Here's your compass and map. First, ditch the debt illusion. Debt is not a tool, it's a trap. Minimize your reliance on debt, especially consumer debt, which offers no real return and only serves to make you vulnerable. Second, embrace tangible assets. Shift your focus from paper assets to tangible assets that hold intrinsic value. Gold, silver, Bitcoin, real estate, these are your life rafts in a sea of financial turmoil. Third, become a student of finance. Knowledge is power. Invest in your financial education, learn about different asset classes, and understand the forces that drive market movements.